together there. My slides didn't change over. That's why. Okay. Now that's a mo better. All right. Short sleeve shirt today. Moving and grooving. So I had to do an update on my Omega charts that they built just for me because I was having a problem. So I updated it, and my criteria had to be re-updated. So that's happening right now as we speak. That'll hasn't affected the real-time data, so that'll pop in shortly. We're more than halfway uh, through that, so we'll see that come up pretty soon. Jim said, "Do you still have snow on the ground at your house, or has it all melted?" In front of my house, there's absolutely nothing. I took shovel and kind of spread everything out, but for the most part, it's gone, with the exception of these, 15-foot piles that they built up in some places where you had no choice. What do you do with 3 feet of snow, in a 2 week period of time when you have 5 and 10 degree temperatures during the week that, for 2 weeks that nothing melts. So, but for the most part, it's all gone. It really is not a parking issue any longer. I was in the city yesterday, which is the city in Queens, to visit my mom, and there was nothing again except for massive piles. So we're good. Very happy to see that's gone. And we're getting great weather out there. I'm in short sleeve shirt. So what do we got? 60 degrees here today. I got 60 degrees here today. So so far, I think it's going to get about 65 or so. So all is good. All is good. All right, let's go back into the document. There you go, Steel. 62. Nice. Very nice. All right. So today's agenda, we'll go through our follow us page. We'll look at today's trades, economic reports. We'll go through a review of the market. We'll look at upcoming trainings. We'll go through our weekly training topic and then your stocks in review, which is where you get a chance to take your candidates that you're interested in. Give me the symbol. Let me take a look at it. If you can give me more detail than just the symbol, I can answer in that context. If you give me the symbol, I'll do the best I can based on that, and that's fine. Nothing wrong with it. All right. So here's our follow us page. All of these are clickable links. If you go over to the Trading Like a Boss website, you can get to places like the Trading Post now is up there. So you should be able to click on that from there. And then, for each of these, you've got the symbol there, right? So for YouTube, it's Wealth Builders HQ, right? And you just check it out. So today's trades, what trades did you do today? Let me know. Drop them in the text chat. I saw one in there already from Brenda, I believe. I got to see what, if any, of our bearish trades um, we got into. We've got two open trades right now, too. So I didn't do anything. I did not do anything today new today. Okay. So at least not that we're going to talk about here. So I didn't do anything new today as far as trades go. Too big of a move on the market. If we just do a quick analysis here, we got this gap down today on the S&P. Here we go. Go back. Make sure we got the right S&P. Yeah, look at that. We got that gap down on the S&P today, and it gapped down to this lower level I had in there and started to fail. And it wasn't something that I trusted to move, wasn't something that I was willing to back it up. I decided to sit on the sidelines, whether I am right or wrong for doing so. It's what I chose. Okay. So let's see. Brenda had 10.56% Thursday on SPY. Excellent. Good job. um, yeah, I didn't see it, Brenda, unless it just came in. I'm not looking at emails right beforehand, but unless Amelia sent it to me, yeah, I got it after 12 o'clock already. So I didn't see it, but good job on that. 10%. I mean, I'll take it all day long. No one else is plugging in that. What do we got here? Jim said, did four SPXW trades, calls, made 4.79% in 1 minute, 23 seconds. Nice. On the puts, made 2.79% in 1 minute, 3 seconds. Call was the next one, made 7.28% in 8 minutes, 1 second. And then the last call made 3.11% in 34 seconds. Nice. Good job. So overall, what are you talking about? 7, 10, 13, 17, 18-ish percent. Very good. Trip said two scalps on AMD, 5% cost, 4% on AMD, 5% on Apple. Rough morning. Hence me taking the day off and saying I'm just not going to fight it today. But nothing wrong with the attempt, Trip. Sooner, one of us were going to be wrong. So, and maybe both of us. Maybe I made a mistake because I would have found better trades than me not doing anything. Who knows? But I just had decided that there was other things I wanted to do that did not pertain to trading the market. So Samuel said Friday paper trade on AMD plus $200, Amazon paper trade minus 85. Okay, so you're still up a buck 15. So very nice on that. Um, if we look, these are two open trades, both bearish on Carvana and Tesla. I don't know why I did that. Did I grab the wrong trade? I did. SPY is our open trade, not Tesla. So I grabbed the wrong one. All right, so let me get Tesla out of here because that was a closed trade. We'll leave it there for now. I don't need to fix the line. So SPY, we had four contracts on SPY. We on the 6th, we got out of three. On the 6th, we got out of, I'm sorry, we got out of two. Because if you look down here on line 18, aggressive, 4x taken, four contracts, 2x, 1x, 1x. So we got out of two, we got out of one. That was near the end of the day. Well, actually, it wasn't the end of the day, but it was. We got out of one, and we've got one contract left on SPY. So if we look on Carvana, let's go there first. CVNA, right? Carvana, very nice. Very nice. We got into 321. It's right now sitting at 304. Woo! And we have not hit an exit yet. Nice. Very nice. Right? So if we can get down to that three, well, actually, um, yeah, it's over $300. So let's do it this way. Here, let me go in here and I will share this with you guys. Yeah, here's pop. I just gotta make sure I got the right page. So when you're looking at stocks that are between $300 and $500, which we have right here, between 300 and 500, we're looking at $2 away from our support level in this case, because it's bearish. $2 from the support level is where we're looking to take our exit. So if our support is at 300, we'd be looking at 302. Our low today was 303.59. So we're not out, but we're pretty close. A little bit more, magnifique. Just absolutely perfect setup there for Carvana. SPY, like I said, we've already locked in $1,000 of profit, 1,100 in profit. And today, woo, baby, look at the. I mean, these moves are rocking. So we've got a specific exit based on the 5 exponential moving average. I'm going to talk a little about this tomorrow in pop. But I mean, look where we are. We got in pop. We got in SPY. Come on, move over. When the stock was at 678, right? And right now we're at 670. So we have an $8 move on SPY. We're killing it on our swing trades there. So overall, very pleased with what we've got. We had bearish calls on Adobe in pop from Friday. So nothing there. Nothing there. Uh, Hold on, that wasn't Adobe. Sorry, it's AMD. I'm looking at it. So why would I be doing a bearish call on that one? I'm reading the wrong letter. So it's AMD. So this was Friday. So we gap down. We're looking for the pullback. So if we roll over here, we'll be taking the entry, but we're not in. Amazon, we had a call with a dollar amount. Bearish below 210. We're in Amazon right now. We're in at 210. Where did we open? We opened at 209.37. We're in at 210 on Amazon. Meta, we had a bearish call in as well. No trade though. We need to pull back. We got the gap away. So no trade on that one. So Right now, Amazon is the only one. So we've got one trade entered for today. So overall, not too shabby. Again, with I don't want to talk SPX just yet because we're not there, but with what's happened today on the right on the open, I was not interested. I don't know. I clicked something and shut down my charts. It looks like. Um, Let me start it back up. I don't know what happened there. So let's go take a look at economic reports. This was not on the docket when I did pop on Friday. Saturday. I think I did it Saturday. Saturday evening, later in the evening. I did it. Meaning Trump was not on there. 435. Interesting that they're doing it after the market. But in hindsight, I didn't say it, but in hindsight, I should have thought, why is he not on the docket with everything that's going on? Maybe there was enough shakeup over the weekend where you get some of the guys like Kramer saying things have changed so much now, the war has morphed into something that we weren't planning on, or maybe with some of this coming out from this weekend, he felt he needed to get out there and talk. And any good leader should be out there talking his or her way through this. So it's going to be interesting to see what comes of it today. I have an appointment at that time, so I'll be recording it on CNBC um, because I do want to see what he has to say. But again, not surprising. When you look the rest of the week, we've got nothing else for tomorrow, at least not that's orange and red. 8:30 on Wednesday, CPI. So big reports, all pre-market. 8:30 unemployment report on Thursday, pre-market. Um, Friday, we've got a lot of 8:30 reports. PCE, so it's core PCE, which is the price index, GDP, durable goods, GDP. So a couple, three different reports there combined between those five or six line items. Jolts coming in, which is job openings. I think that's going to be scrutinized very heavily this week because of what's going on with pricing. If you saw oil, how much oil has jumped up, and the market. I mean, I saw the Dow was down over 600 points this morning, pre-market. At least when I had flipped through channels and I saw CNBC, it was down over 600 points. So Jolt, so that's a 10 o'clock report on Friday. So we could get some reaction to that report, depending on what it is. Again, the war has nothing to do with the economy. What I mean by that is, it's not like someone could say, "Oh, we saw this coming." The economy is the economy. The war may change that, but it is not going to be in a number that's being, released Friday at all. That would be 2 or 3 months from now. You might see that someone could say, "Oh yeah, from this date back, we were able to determine that something was probably going to happen." And then Tripp said, and the Fed announcement is next week, right? So where are we at? Because I have not checked that now in a little bit. Let's see. So we're at 97% that we stay, 97.4 as of right now. So 95, 97 that we don't change. There's only a 2.5% chance we drop a quarter point, which I don't see at all. Okay. Um, my daughter got so excited because they want to buy a house and she's watching interest rates come down and she's thinking, yeah, this year we're going to see a whole point. And I still think we have the potential for a half a point more, but I don't see it now. And it really is going to be dependent on what happens, oil prices, war, and all of that. That's going to determine a lot. How involved does the U.S. actually become? Um, we're seeing prognosticators saying July before first cut might change with war. Yep, exactly. That was Tripp. So very much so. We don't know. We have no clue, right, as to what's going on there. So at least I got all my data updated, which was good. Let me bring back my. That's not what I wanted. Open quote board. Let's go back into my pop list. All right. Bueno. Okay, let's go back into our PowerPoint, and let's go look at a market review. Okay. So we have had our fair share of type events happening in here. Okay, last couple of days. But if you look, and I lost some data. If any of you have problems with when it comes to Omega charts, if you have problems with data or with the charts doing weird things, what we found was one of the templates that I was using, which I probably built 12, 14 years ago, was causing the issue. Every time I did something on that template, it would crash and we would lose it. So I was able to delete to rebuild that template. Genesis can help you with it, but to rebuild that template and knock wood, it seems to be working much better. So, but if you do have that problem, just reach out and let them know, and they can help you with that. But so I lost some of the data on here that I had, but like some of my lines have disappeared, my swing highs and lows. I'm not too worried about what's going on back here, but I definitely wanted to duplicate what I had up here. Lower high, so we had a high, all-time high actually, but lower high, lower high. That lower high right there is scary, right? We had a low, slightly lower low, and a slightly lower low right in there. Okay. So I want to incorporate, well, let me ask this question. I did this the other night in a different training. If you have a bearish trend, which is what we have right here, what trend line do you draw first, or does it even matter? So tell me, if you've got a bearish trend, would you draw support or resistance first? And does it even matter? Just drop that in the comments. Just curious as to where everybody's at. And this everybody's like, no, I don't want to be wrong. Just put an answer in there. I'm not going to beat you up for it. By participating, you'll get an answer as to why to do it a certain way. Yeah, you're right, Barry. Draw both, but which one first and why? Jim, you're right. Why? Yes, Tom, why? And and you might have the answer. You may have known and go, well, it's this, of course. And others would say, no, I'm not really sure. Okay. So a lot of answers. I appreciate the participation very much. So if we have a bearish trend right now, which is what we have, okay? If we have a bearish trend and we have a resistance line and we have a support line, what makes us not be bearish any longer? If we break through support, does that mean we're not bearish? That has nothing to do. No, that's not what that means, right? Of course we're bearish, maybe more bearish. What changes if you break through and close above resistance? Okay, it puts us in more of a bullish light. So you have to ask yourself the question: what level is the one that, if it's violated on a close, changes the overall pattern, the trajectory, whatever you want to call it? What changes the pattern, the systematic approach on the S&P 500? And in this case, if it closes above that downtrend line, things change, right? So then if that's the case, then we draw the downtrend line first. If we had a bullish trend, we had a stock doing this, we have support and resistance, we're going to draw support first. Why? Because if the stock breaks support, that bullish trend is not holding any longer. It's changed. Okay? So always draw the line first that matters the most, and then make the second line parallel. Because if you think about it, if you look here, I've got a low, a lower low, and a slightly lower low. If I matched up those lines, those points from here to here, that's not really a trend, right? Actually, you see where the line is here? Watch. If I pull this forward, look what happens. We get to a point that these two lines intersect. Sooner or later, they're going to cross over each other. Okay? So, no, this would not be the way to draw it. So what you'd want to do is you draw your bearish trend line first, and then you duplicate it, right? Best way to do it is put your mouse on it, right-click on it, and hit duplicate. It'll draw up higher or lower, and then just from the blue line, in my case, the blue line. Don't do it from the red, or don't do it from the edge of the blue, right? You see the four arrow? That's going to grab one point and change. You can't fix that any longer. Delete that. It's easier. Okay, I don't know why it's not deleting. Let's try it this way. Okay. Instead, double click it, grab it from the main point where it's just a hand, and you could drag this up and down. Okay, and then you would drag it down and you would put it as a support. And I came off of this bottom here because it incorporated at least all candles hit on it. If I didn't get this bottom as part of it, if I would have made this lower, so let's go, I'm just gonna move it out of the way. Let's just go off of that bottom. Or if I moved it up, well, we already had it moved up, but it was off of this bottom here. I was gonna say if I moved it up to that bottom, which is where it should be, but I'll just hit undo and it puts it back. Um, yeah, it just didn't like the way I did it. Hold on, let's try this again. It's funky because when you duplicate lines, just the way that it duplicates it. So, and then everything remains parallel. And that's, yeah, and there's channeling tools on here still also, but I am a tremendous advocate of being able to do it and analyze it line by line for only one reason. I'm not thinking about where the second line goes when I'm drawing the first line, but there's nothing wrong with using that channeling tool if you're comfortable with it. I like the single lines better, but they ain't no rules. And again, if you just remember this simple phrase, technical analysis is a science. Until you learn it, then it becomes an art, right? And that's the finesse that you have in there. What does it look like on a line chart? Brenda said, not very pretty. Okay. Not very pretty. I think I missed a comment before. I know I did. Steele said, I watched you live on YouTube the other day. Was there a Zoom for that too? No. So Tradier has a platform they call the Hub, where they allow creators that they work with, like ourselves, stock market educators, to do a show to their audience, and then it promotes on. You'll find it on our not TikTok, sorry, on our X, right? So it'll be on our X account. You'll find it live on our YouTube channel, but it's not a como se llama? It's not a Zoom that gets done. This gets done directly on a YouTube through OBS or something. I think they're using OBS or StreamYard. They're using StreamYard as their backbone. So no, there was nothing on it. But you guys can. We're going to start listing that out as upcoming events if we continue to do them. We've done them now for about 6 weeks. Yeah, about 6 weeks or so we've done it. Yeah, there you go, Steele. Okay, good. All right. Just going back and reading the other comments of what people were saying, the why. So right now, what happened today? Analyze the candle. Analyze today's candle. Okay? I want you to look at what just happened today, only today, and come up with an answer as to how the day has progressed. Right? I'm going to give you 15 seconds. I'll talk a little bit like this, and then I'll start explaining it. But I want you to look at this and where did it open? Where did it go to? Where is it now? Who's in control? Who was in control? What are the levels and so forth, right? Because this is what you need to do 5 trading days a week if you're in the market for 5 days. You have to look at the overall market and be able to say, hey, this just happened, and this is what I think is the why. And what do I see coming next? Where does it go from here? So if we look at what happened, very first thing is we gap down. Big gap. So I want to get more data on there. Big gap down. We gap down to the open, which is down at the bottom of the body. All right, so Brenda typed hers in. Bears tried to pull it down, but the bulls are trying to take over. Okay. So yes, Brenda, but let's look at it now. So we've got and I want to see the fib levels. So we've got a 50 percentile on the pullback. So this was not our first foray at the 50 percentile. We got there on Friday. We got pretty close to it back here in December, mid-December, okay, which was right here. We got pretty close to it, okay, and then we bounced. But we got down from where we were. We got down to what was the lowest pullback since the start of this fib. I'm not talking about the stock price wasn't lower. It was lower here for sure. All of these days it was lower. But that pullback, this was the lowest it's been in the entire run, okay, on that gap down to right there. Okay. So that's the first thing I see. From there, the bears move. Now, what do we have to do? I got to look at a 5-minute chart because I cannot ascertain anything of what's going on here. All right, so here's my grid line. This is where we left off on Friday. Here's our gap down. Now, 1, 2, 3, 4, 5. 5 minute candles. You can see this is 5 minute, upper center left-ish, where it says 5 minute, right there, right above Oprah, not Winfrey. It took 30 minutes and we had a strong bearish thrusting pattern. That gap was a gap and go, meaning we ran from there. We opened on the day. Here, let's look. Opening price, 699.80. High, 699.80. 66.99.80 for both of them. So we opened at the high of the day. So what is that top of that candle called? That's a shaved top. No wick. So not only did the bears take control on the open, they drove it hard, power driver, turning that wrestler upside down and falling on his head, just dropping his own body weight on his head, right? That was a great move down. We had a little bit of recovery and then a little bit lower. So the bulls tried to take it back. We failed at the 618. It pulled back off of there. We got a little bit lower. And then we started moving up, which was more of a clean thrusting pattern instead of a strong bearish thrusting pattern. This was a clean, not dirty. Dirty would be, this would be dirty. A couple of bearish, then a bullish. A couple of bearish, then some bullish. A couple of bearish, then some. That's dirty. This, we had some bearish candles in there, but that overall move from this bottoming point here, we had one candle in the middle there. We had every other one for 2 candles there. No big deal. We failed. Then we got a couple of bearish candles. It's clear where the top was there. Okay. And then we're bouncing back. We have not recovered. We have not filled the gap on this at this point, right? But we have filled, I'm guessing we filled half the gap. Let's see. We come from where we closed to where we opened. Half the gap was 67.19. You wondering why we're slowing down there? 67.19, right? And we got up to the 618, up to that point, which is definitely a gap fill component, all right? So when I look at the daily chart, I need more data. I need more data. But just from a daily candle, it tells me the bears jumped right out of the gate, pulled it down on the open, and then it ran down, broke through the 50, broke through the 618. We get a long stretch back up. So what's happened? The bears had control right out of the gate, shaved top on that open candle, drove it down, and the bulls have slowly brought it back up. That doesn't put it bullish at this point. We're still at the 50 percentile right now as we speak. So that's that 50% of that fib move is what I'm talking about. This line here is a 50% line. Okay? So half of the distance from where the fib started to where it ended, that's this red line. That's where we're sitting right now. Maybe just a little bit above it at this point. Market's open. We're moving around a little bit. And that's okay. Right? We're not ready to make a decision yet. We still have a few more hours left in the market, 3.5 hours left of trading, right? Or of activity left. So the market will tell us what's going on, but not yet. So far, this is what we're able to ascertain, to discern from the market. This is what I see. What do I want to see? If you're bullish in the market, then I want to see it make a pop to the upside. Okay. I can tell you right now that the three trades that I've got on my tracking sheet for today, and I told you who the three were, right? All three of them are bearish trades. The two trades that I've got open right now are bearish trades. So take a wild guess where I want to see it go. I want to see us fail from here. I want fear. I want panic. I want capitulation. I want to see the, oh my God, the world is coming to an end. People throwing their hands up in the air, selling crap that they have no reason to sell just because they're petrified of what the market is going to do. Why? Because right now, the fear is not strong enough to have that big burst to the downside and get all the looky-loos out of the market and give the market the opportunity to heal, to grow again. Now, don't get me wrong. If Trump comes out tonight and says, war's over, we shook hands, everybody's friends again, oil prices are going back down, we've secured an extra 100 gazillion barrels of oil at $1 a barrel, and prices are going back to where they were, and Bitcoin goes back to where it was in the post-market, and all of that happens, it won't make a difference. Nothing's going to matter. Okay? Now, I'm not saying I anticipate that. But if at some point the war is going to be over, and when it does or is, then we're okay. If this becomes something that is more of a Israel gets dragged into it and not us, we'll be okay. The sleeper cells and all of that, guys, you can't. I spoke with my cousin the other day, and she's petrified of this. Petrified. And I'm not saying that it's not warranted, but for me, I just can't live my life that way. I can't. I can't go through life in a constant state of fear, right? I know the monsters or ghosts or skeletons in my closets that keep me awake at night, right? I don't need to worry about what might happen. The shoulda, coulda, wouldas, right? What about this happen? What do I do if that happens? Well, just be prepared to defend yourself and do your thing. And that, what else can you do? What else can you do, right? You can't. So I'm not living in that fear. I'm not living in the fear with the market. I live it one day at a time. Me, I want to see the market go down. So I want to see the market do this. In an ideal world, we push down off of here, we retest again, and we fail, and we continue to press down, and we go layer by layer by layer until we take this entire fib out, right? And again, hopefully, there's big selling along the way. And if there is that big selling and when I talk about big selling, where there are more sell orders than there are buy orders, and prices continue to drop, which means your portfolio value is going to drop. Hopefully, you have positioned yourself, and I've taught this, and this is for those of you that are in Mastermind and that are in Inner Circle, you've learned this years ago from me already. Those that have been in there for a while, where I have taught a portfolio strategy to manage your position, you're sitting back going, man, I don't care, because you can drop 20, 30, 40, 50%. And at worst case scenario, I'm looking at 8 to 10% of hit on my portfolio based on what the market does. That's it. That's it. Because there are ways to manage and protect yourself. For those that are in Inner Circle and Mastermind that have done that and taken advantage of it, you've more than paid for decades of cost into those trainings. Right? Just if you've protected your portfolio with these strategies. Not to mention, you've been making an extra 10 or 12 to 15% a year on those positions, just based on the strategy that I've taught it before. Okay? Let's see. Trip said gap and run to the downside, but the bulls are fighting hard and winning right now. Without a doubt. Yes, Trip, they are winning right now. Okay? The other side of this, guys, is we may see the bullish move. What do I want to see happening here? I need us to get back above the 67, 65. My goodness, this super fib is just that. I need us to get back above that, pull back and bounce. And if that takes place, even though we're in an overall bearish pattern, I will potentially trade some upside positions, day trades only, looking at this resistance line. Right? And trying to project out when I think we're going to get to that level. Is it going to be 1 day from now or is it 5 days from now? That's a different price point of where that is. So there are some differences in there. SPY is getting ready to fill the gap. Trip said 618 showed some resistance until about 10:35. Right. Why did what even start, Brendan? If you're talking about the war, it all has to do with Israel and guys here. So through the election, I did something that I have not done in probably any time in my life, I should say, not even the amount of time, is I got very focused on news, living on various news channels, Fox News, ABC, CBS, CNN, all of them, MSNBC, except for the idiot Joe guy there, whatever he is on that. But there's one or two of them that I just can't stand, right? But I got very hyper focused on it, and I found myself having a really bad attitude, mindset, mentality, and so forth. I just couldn't do it. So I have pretty much stopped all news. I hardly turn CNBC on any longer. I turn on the chart. 9:30 in the morning, the market opens. I know what the market's doing. Look at the market. I don't need to look at CNBC to tell me what it's doing. I don't need Kramer's opinion. 65% of his opinions are wrong anyway. I don't need his opinion, okay? Or whatever percentage it is. I don't need his opinion, okay? For me, I need to stay clear-headed, and this is the best way for me. So if the market takes a bounce in this channel, I will look at where we're at. So if we close, let's say we close today right here. This is S&P, right? S&P closes up. Tomorrow, we get a small pullback towards the 67, 65. I'd love it for us to hit it, break through it a little bit, even get into this blue zone in here, right? And bounce from there. And the market is showing bullish signs. I will take a bullish trade with this resistance right here of both the confluence of the 8 and the fib line, even though it's an overall bearish downtrend. Okay? So am I going against my rule of only trading in the direction of the market? Yes. But that rule states if you're a newer trader and you're not familiar with trading against the overall market, then don't do it. That's to help someone that is newer. Those of you that have been doing this a long time, hell no. I have no problem with you going against the market as long as you are willing to adjust and make the necessary decisions to, yes, I'm in, yes, I'm out, whatever it takes to manage that position. Then I'm good. Brenda said about 90% of the stuff we fear or think never happens. Exactly. It's the waking up at you live in Florida on the beach, so you're afraid of sharks. Except you wake up in the middle of the night at 3 a.m. You're on the 34th floor of a building, and you have this fear that you're going to be attacked by a shark. You're on the 34th floor. They ain't getting up there. I can promise you, they're not coming through your pipes. You're okay. Jim said, let me go back to that in a second. Yeah, it's all about China. Well, might be part of a trip. We're going to leave that alone for now, though. The news is designed to cause fear and stress, so you keep watching. Why do you think we got 15 weather models now? So we can compare. Oh, but that one over there, that's never right. It says we're getting 42 inches, and that one over there says it's going to be 75 degrees. Wait, what? Sensationalism. Tripp said, use ground news, great news aggregator that shows the sources, the owner, the bias, etc. Also has blind spot sections for users. Harry said 2 to 3 trades and 2 or 3 trades to you bearish now. What would be the expiry on the options? Well, it all depends what I'm trading. That was Harry, right? It all depends what I'm trading. So Harry, if I was trading the SPY, all right, we took those as swing trades. So the ones that I mentioned off of this page today, which were AMD, Amazon, and Meta, they're all swing trades with 30 to 60 days of expiration. Probably closer to 45 is my goal. But if I look at this as a bounce with what I've got drawn on the screen right here, and that's SPY, and if that happens tomorrow on Tuesday, I'm going to take Tuesday expiration, the one that expires tomorrow. If it's another stock, if it's a Netflix that doesn't have an expiration until Friday, the upcoming Friday, I'm going to take that Friday as the expiration. I use the shortest time possible in that trade because no matter what, I'm not carrying it overnight. There is no, let's make it up by, oh, we were wrong, so let's make this up by holding longer. No, we don't do that here. At least I don't. That's not how I teach it. So they're all very short term unless we're specifically going after it as a swing trade. We're hurricanes, exactly. Good, Harry. Excellent. So Jim said, I took the close from Friday and the open from today, took 50% of the move. It came out to 67, 1990. The more confluence to your numbers, I took a phone call, so if you said this, I didn't hear it. I did talk about the gap in there when we looked at the 50% gap, even a 618 gap. A 5% pullback, Jim said, to 66.52.17. We broke through that today, breaking the ice as you talk about. Oh, yeah, we broke again this 66.67. Woo, I ain't liking that at all. Right? Nasty number. Nasty number. But it's there. So for a day trade, what am I doing? I'm going to get in the trade if it bounces there, right? Tomorrow, let's say. If it bounces there, I'm going to take the entry. And what do I have got? Target one is up here. Target two is micro day trading, MDT, which gives you an exit. There are three or four or five different exits that you could take based on patterns. You take an exit, and basically, if you get a really strong directional bullish move quick, and then it starts to fail, I'm out. I don't care. Resistance was up here. I only made it to here. It doesn't matter. I'm out of the trade. Whatever it is. I made 12 cents. I made 50 cents. I made $1.91. I made $14. Doesn't matter. I'm out. So trade exit number two is a micro day trading. Exit number three is my stop loss. And exit number four is 3:45 p.m. timed exit, Eastern time. 15 minutes before the market closes. It didn't hit resistance. It didn't hit the stop. Get out of the trade. No ifs, ands, or buts. I don't want to think about it. I don't want to pass go. I don't want to collect $200. It means I lost $50. I made $80. Whatever the numbers are, it doesn't matter. Oh, I'll just hold it till tomorrow. Hell no. Hell no. You don't hold it till tomorrow. If you are committed that this is a day trade, then get out of the trade as a day trade. Just all you need to do is watch on days. We may not be able to see anything on it, but okay. So here, if you look at Friday of last week, right? We had this massive move down, quick, big gap, big run back up. So in here, we would have been out with a micro day trade, right? And if you watch somewhere in here, even here, right? If that option when you got in that trade was $5, $6, we'll call it. Let's say when you got in the trade it was $6, right there, back at the same price point. Some time has gone away, but at that same price point, you're looking at $2 or $3 worth of the option there. That's it. That's it. Why? Because the implied volatility is gone. Time value, theta, is disappearing quickly because it expires today, right? So that micro day trading exit is phenomenal as far as I just need to be out. I need to be out of the trade, okay? So this is going to kind of lend itself. Well, let's do this first. So we've got the Inner Circle check-in, which is tonight, 7 p.m. The monthly is on the 12th. That's 2 hours I'm teaching there. Mastermind group is tomorrow. Trading You is coming up 16th. We've got a couple next week as well, 18th and 19th. Power Hour Trading Coaches Playbook. No Power Hour next week. Guys, I am going to be out of town. I'm not going to be able to do it on Tuesday. I already have a prior commitment. I'm going to a wedding. I'm going to be in Phoenix. If anybody's down in Phoenix, I'm going to be in Phoenix with my wife for a couple of days. She's sitting there right now praying that we get upgraded to first class from our Delta Comfort, and she has no idea. Did she leave? She's gone. Okay. She has no idea that I upgraded us already and put us in first class. So she's wondering why she's getting meal requests. I'm like, oh, that's just comfort. It's because it's such a long flight. You get a meal in comfort on Delta? Oh yeah, with that long a flight, sure you do. She doesn't. There's no clue. She's going to be excited when she goes to walk and realizes that she's in seat number 4. Because she doesn't look at any of that stuff. She doesn't care. Excellent point. All right. Her prayers worked. Exactly, Steele. Exactly. Consistency code is just that, guys. That's a free training. I've got 2 of them left. And realistically, it's what it takes to be consistent in the market. I'm going to show you some consistency patterns, things that we're going to look to do. I've got 2 trainings left. I've already taught 2. The one that's going on tonight, the 9th, is without a doubt we're going to be teaching that. The one on the 11th, I'm not too sure yet. I don't know if I want to teach that one. And that's just because this week is insane for me. I'm teaching every night plus a couple of noons along the way. It's a little bit busy. for me. So I may not be able to do the one on the 11th. So the one today may very well be the last one. So if you can't, if you can get there, try to make it. Pop is Tuesday next week. I get back on Monday. I thought it was Tuesday I was getting back. I get back Monday, so there'll be no problem with that. The one that's this week, though, will not be on Friday. I'll be doing it on Thursday. Right? I'll be doing it on Thursday. Okay? So it'll be a day early. So you'll still have it. It'll just come a day early. And then covered call, E-mini are also on regular schedule. Our weekly training topic, we waited. I purposely did not let my team have a topic ready to go out in emails or any of that stuff. We put it on the back burner and waited for today. And sure as God made apples, look at what's going on right now. So the topic is key levels to watch on the S&P right now. Right now, we've talked about a bunch of it already. Now let's go back into the daily chart. And the absolute unequivocal most important level on this chart right now is that 67.65. That's number one. And it's the only thing that doesn't have a number on it, 67.65. Okay? So that's when I talked about break above, retest, and bounce. I've got a confluence here as a resistance. So 68.10 would be my resistance there. That would be my target, 68.10, of where I think it's going to make it up to, right? Maybe that's what I'm focused on. 68.05, somewhere around there. We don't use 100-point levels on the S&P. We use 1,000-point levels only on this. So we've got nothing to worry about right now. Yeah, close to filling the gap. Good point, Steele. Sorry, Brenda. Good point. Yep. Jim said, FYI, long lines, TSA at airports because of the partial shutdown. Get to the airport hours before your flight. Yeah, and that'll be fine going there. We have a 6 a.m. flight coming back in Phoenix. So that is going to be very, very interesting. We'll see. By the grace of God, we make it. If not, I'll be there an extra day, whatever it takes. I can't worry about it, but I appreciate it. I know I've got friends that have been traveling and dealing with some of it. Um, some that were just stuck in Aruba because of what was going on with the war. They couldn't get out. JetBlue, baby, they were stuck on JetBlue, and I am not a fan because of that. I was stuck in Washington State. JetBlue quoted me a week on 9/11 to get home on a flight, and I was not booked on Delta, but I was booked on 7 or 8 Delta flights the next day. They backed you up on every flight, and I was able to make it home. So good climb. It's a good bounce happening on the S&P right now. So from a gap standpoint, that's it, and we're close. So key levels for right now, 67.65 is right here. This basically gives us a blue zone inside of these two levels. And then on the upside, all you have to do is stick 2 letters in your head, L, L. Look left. Swing low, that's the next target. 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 Every bit along the way, this is what we need to see violated. I need to close above this one. That's number 2, number 3, number 4, number 5, and so forth. Okay? And then that number 5 puts me, let's do it this way. Let's get away from there. So that swing low, if I just, let's drop it in so it's easier to get our mouse there. So now look at where my mouse is. The horizontal line, look at where it intersects with the 8 moving average, will be at a confluence between the fib line and the moving average and price if we get up to this level, which is exactly what I want to see. Okay? Exactly what I want to see. And then once we get above it, we'll look at moving averages, particularly at the 21. I don't focus on the 55, right? And then 69.03. And then now you start looking at swing highs. That's our next one, then our next one, then our next one, which is our all-time high. All right? Because we ain't got nothing else up there, baby. Nothing, honey. All right? That's it. That is the all-time high right there. Okay? All right. As far as the downside goes, guys, we got to look again, every line, the 67.13, the 66.68, critical levels, right? If we look down below there, And we need to now because we violated the 618. So now we've got the 764 at 6612. That's our next one. Because that bottom, this is just look, think of that long wick. Think of it this way. Think of that long wick as there's a rope hanging off of a building, okay? And someone's holding on, okay? Can only hold on for so long. Sooner or later, that'll be broken. Could be now, could be 6 months from now. Sooner or later, we'll break to the downside, okay? And always, no, but there's a high propensity for it to happen, right? We pierce through that 618. There's an opportunity for that downside, and we want to focus on that. So if we do make the move to the downside, you've got the 50, which is the red line, the 618, which is the purple line, and then you've got the recent low of today, which is your next point that you're looking for. I would not be making trades off of today's low since we're not even closed. And even if we are, we need one more day to pass before we consider it a valid data point. You never want to use today as a data point. Um, okay, I think I got all the questions there. All right, good. So what stocks do y'all want to take a look at? Drop them in. Let me know what you want to see. What tickers do we want to pull up? Steele said, what would you say is the lowest stress stock you trade? SPY. Hands down, Steele, SPY. It has one carrier or one follower that it focuses on, which is the S&P 500. It is not driven by sector specificity, meaning you're not in the oil sector, you're not in the tech sector, you're not in the chip sector, you're not in the retail sector. It's the overall market. So it's every sector, but there's not. If oil goes down, it doesn't mean the S&P, well, oil was the really bad choice, Rob, since that's exactly what happened today. But if chips go up in price, it doesn't mean the S&P goes down. And it doesn't mean that it suffers the way it did today. The fear right now is a massive overreaction. This gap and go today was a massive overreaction, in my opinion. Now, I'm not stating that I don't think we're going down any further. I hope we do. I really hope we do. Right? Just as I hope some of you followed along and took advantage and picked up Netflix. When I saw the snickers in the comments from some people that when I said buy it at 82 and it broke here on this day, and people are like, oh, so you're still happy you bought it? Yep, because I bought more at 78, right? 77, whatever your number was. Okay, next level, go, right? And then what? Well, now you bought at 82, then you bought at 77, now it's at 98. Oh, now what? Right? Well, now you got to wait. I only got two of my 5 buy points were hit, so I could not get a full allotment of what I wanted in there. So that's it. Again, everything we talk about is not funded, right? But hopefully you took advantage of it, right? There are patterns, techniques, things that happen in the market that you need to be fully knowledgeable of. SPY still, to me, is one that there is not an excuse that anybody could give me of why someone should not have SPY as part of their portfolio, for sure, but part of their trading companies. Unless you are just this, adrenaline junkie of jump off a building and you've got to assemble your parachute midair because you need that kind of adrenaline. And you're trading just massive companies that have 2x and 3x moves compared to the market. And then that's different. But the average person, I think SPY belongs in the portfolio. Yeah, there you go, Jim. Netflix, dollar cost averaging. That's the whole idea behind it. Bottom line is, if Netflix kept dropping, and I wish it did, I knew it was going to go up. People are not going to stop watching Netflix. Not at all. So the call was to buy it if it got to 82 and bounced, okay, which it did back here, okay? And if it violated and broke, bounce off the 77.20, which it did. But if it fell, bounce off the 72 and a half. If it fell, bounce off the 68 and a half. If it fell, bounce off the 60 and a half. Actually, we might have had to split that one there. Yeah, we probably have to split this. Probably need -5. All right, so off 64 and a half. Oh, it did it again. Shut down. I don't know what's going on. This is what was happening the other day. It stopped, and now all of a sudden it's back. I don't know why. People are not going to be driving as much with the price of oil up. Stay home and watch Netflix. There you go. Steele said, I want less adrenaline in my trading. Right, Steele, that's exactly it. That's the whole point behind it, is that. Let's see if we can get this going again. Real time data. AI is taking over your computer. I think so, Brenda. It's funny. I had a Zoom meeting this morning. I checked my audio before I went into Zoom. My audio was fine. My speakers worked. I opened up Zoom and my speakers stopped working. I had to shut Zoom down before I redid my whole computer. Restarted it. I checked volume again. It worked. When I restarted Zoom, it was the volume was there. So it's definitely other programs messing with it. Um, all right, so let's go take a look at Intel. We just got to wait a moment for the real time data to pop up on it. But overall, this was Tom. So Tom, overall on Intel, we're in a bearish. Well, we were bearish. We were bearish on Friday's close. Today, right now, as we sit, we're at a bearish neutral. But I think we've got downside potential there. Let's see, 40 to 44 is $4. So I don't need to fib it in there. So Tom, I like this one. If we can fail, retest the 44 and drop, we're looking at 37 as support, 37 half, 38 would be my target on this one. So I like this one a lot for downside. SPY, just what a great move. Just didn't have a lot to where we bounced off of today was the tough point. There wasn't a lot there. Downside is 670, upside is 674. I wouldn't mind a retest of the 670 in the bounce. Bullish market. I'll take it up to 674 and a half. So 673. Pop rules make it impossible. We wouldn't make any money on it for pop. It's too tight in pop. But there's still opportunities there. GOD. So let's see what did gold do. Today we're down 5 points on Friday. Oh no, that is today. We're down 5 points today. All right, so we're stuck right now, Brenda, between the 21 and the 8. So I'm not a big fan of how that's looking right now at all. One bit. So yeah, I don't like it. If we broke the 466, maybe the 8 becomes a bit of an obstacle course on top of us there. So I'm not really interested in trading it to the upside just yet. Break above that 8 and it puts us in the middle of the channel, of the fib lines and gives us a rank of 3. So I need it above the 483 next. So, all right. And we hit the post, which is a radio term, meaning we're right there on time. As the song is starting, we stop talking. As the song is ending, we stop talking. So, everybody have a great rest of your day. God bless. Appreciate y'all being here. Thanks so much for the participation. Caution, grasshopper. That's all I could say, guys. Trade this thing with severe caution. There's a couple links in there, like the consistency code. Go grab that, check it out, get registered, try to get in tonight if at all possible. And I will see you all at our next update. Take care, everyone. See you soon.